Okay, it is June 27th, which means we are almost halfway done with the year. Uh, can't believe that it's already gone by this fast, but very interesting 6 months so far. Last couple of months definitely very different than the first couple, but this is something that people have been asking for. A lot of interesting stuff going on in the news and the market, all that kind of good stuff. So this is our biannual market update. We'll do one again probably at the end of the year, December or January, somewhere in there. But now seemed like a good time to do the biannual, and we got about 3 days left in June, so we are almost exactly halfway through the year. So let's get into some of this stuff, and we'll talk about what it means and how it is affecting people. So this is not the prettiest slide, but these are the numbers that I keep directly out of my database, and this is a little bit more accurate than what you'll see on the news or in LVR even because LVR's number, which is our trade organization, their main issue is that they include everything in the MLS. Well, the MLS goes out to Mesquite, it goes out to Pahrump, it goes about 6 hours north to whatever it is that's up there. So there's a lot of outlying areas that don't really factor into how our market really truly operates. So this is really and truly the Vegas market. So a couple of numbers to kind of point out here. So as you can see, our average sales price of 562. So this is for all property types. So this includes single family, condos, townhomes, everything. Pretty good. Well ahead of last year. We're at 546 at the same time. But as we'll dig into some of these numbers, there's been a definite trend for the last 2, 3 months, and it's definitely starting to affect some things. So if you look at this sold 30 days column, 3 months ago here in March, we're at 2522, which was actually a little bit above where we expect to be that time of year. Things were kind of looking good in the early spring. And then as you can see, there's actually just been kind of a slow trickle down in terms of our closings and a big drop off the last month, down from 2400 somewhere in there to under 2200. So that, along with kind of a steady increase in listings, and we'll get into some other charts that kind of explain this. Our effective inventory has definitely grown. So it's currently at 4.49, basically 4.5 months supply. And I'll explain what that means on this next slide. But it is an important thing because we're going to kind of see how that's affecting some things. So, really easy way to think about the real estate market. It's very simple, supply and demand. So essentially what you have is if you were to just calculate how many homes have been sold in the last 30 days, that's 1 month's worth of supply, basically at that current level. So however many active listings we have, we divide that last 30-day sold number into it, and that gets you what your months of supply are. And the reason that's important is because the months of supply or the amount of supply is really what dictates market dynamics. It dictates prices. It dictates if we're going to have multiple offers or very few offers. It dictates how long homes sit on the market. So this is just kind of a simple little inventory overview here. So essentially less than 4 months supply, which is what we've had for a very long time now. Basically, bouncing around, but it's basically been under 4 months supply since about 2019, 2018, depending on the time of year. So we've been going on a pretty good year, a pretty good run of about 5, 6 years in a row now where that's really never come out of that. And so under 4 months is a seller's market. That's why you've seen prices go up. Now, obviously, there's a big difference between 3.5 months supply or 1 month supply. In 2021, even early 2022 before interest rates went up when things were really, really crazy. A lot of times we had less than a month's supply. So we were literally selling more homes than were currently listed on the market. That's why prices went up really aggressively in 2021, the end of 2020, as well as the first half of 2022. But even the last 2, 3 years, 2.5 years, we've had an inventory basically somewhere between 2 and 3.5, somewhere in there, and you've still seen prices go up despite, what a lot of people would say are fairly high interest rates. So at 4 to 5 months, you should have a fairly balanced market. Shouldn't really favor either buyers or sellers. Should be essentially prices should stay relatively the same. And then at 5 or more months supply of inventory is when you have a true buyer's market, and you should be seeing prices go down once you get over 5 months supply. So like I said, we're at 4.5. In theory, this should be a pretty balanced market. And this is what the market looked like for a lot of my career, from basically 2013 to about 2019. We had somewhere in the range of 3 to 5 months supply. Sometimes it would be a little less. Sometimes it might be 4, a little bit more. but especially up until about 2018, this was very normal and prices went up a little bit, but it went up kind of incrementally. So we're kind of back to where we should be in a normal market, but it's not operating like a normal market. So we'll kind of get into what that means. As far as where our buyers are coming from, pretty not much has changed there. Distressed properties. So these are properties that are in foreclosure that are being sold. We have 36 out of almost 10,000. So there's really no distressed properties. Despite what you may read on certain things, there's not this wave of foreclosures coming anytime soon. And fast notice of defaults have actually gone down the last 2 months. So still a very small percentage of our market, and that's really just because homeowners have so much equity. So you're not seeing a whole lot of distress sales. Now, here's some interesting numbers that you're going to want to understand. 350 and under, so 350,000 and under. This market continues to really struggle. And we'll kind of get into some reasons as to why, but this is 4.61, and this is very different because up until about the last 8, 9 months, this market's always been the most competitive. It's been the lowest inventory. As you can see, last year we were just barely over 2 months supply. Before that, even in what was kind of the slow season, March and April, we were under 2 months. February was at 2 months. This is at 4.61 now. And I can tell you both from the numbers as well as some personal experiences, the lower end is really probably one of the tougher places to sell homes right now as a seller. Anything 350 and under, particularly townhome and condos, which is what most of those are. If you have a single family that's nice, which is hard to come by anymore these days, it'll still sell okay. But condo townhome has a lot of inventory. We'll kind of get into some of that as well. The mid-range, which is 350 up to 800, actually doing fairly well. Definitely better than the market as a whole. Still under 4 months supply, but this has become incredibly situational. Much like commercial, I'm doing a decent amount of commercial these days, and commercial and this mid-range inventory have a lot of similarities in where it really depends on where it is and what it is. Everything up north, they did a ton of building up north in 2020, 2021, 2022. The builders really put a lot of resources. The city of North Las Vegas was really allowing a lot of building and putting a lot of permits out. So up there's a lot of inventory. If you're in this price range and you're in North Las Vegas, it's still pretty tough as a seller because there's more inventory up there. If you're in Henderson or if you're in the Southwest, these properties usually sell pretty good. You can see the average days on market is still only 21, which is not bad at all. So not bad by any means, but it really depends on where it is and what's around it, especially if it's surrounded by a lot of new homes, which is also the case up north. Pretty tough. But again, very situational. Even with the lower end stuff, we just had a listing last month that we listed a townhome kind of over in older Henderson for just under 300 and really expecting that it would probably be pretty slow. And we got a over list price offer in 6 days. So, to some degree, you never know, but location and where it is and the condition matter a lot right now. So that's kind of a big thing. Luxury, this one high inventory, but this is always high inventory. So this is over 800,000. So over 7 months supply, definitely kind of trending, but really to still have 240 sales, because really what we're looking at right now, most of this inventory issue is not a overabundance of supply. And this is where a lot of people go back to, I think people are scarred by 2008. They say, oh, there's this big crash coming because look at all these listings. Well, we're not even back to where we were doing listings in 2022. So really, it's not that we have this wave of listings. It's more so that we've had a pullback in buyer activity. And we'll kind of get into some reasons as to why that is. But this is nothing like 2008 because we're not seeing a wave of listings as much as we're seeing a little bit of a pullback on the buyer side. So 240 closed sales in this price range for us is still really good. Really, anything over 200 was unheard of up until basically COVID. And you can even see, there was months last year, 178, 156, 123. So 240 in this price range. And this is kind of my experience as well. We've had a listing for 1.3 and then just under 1 million. The 1.3 sold in less than 30 days, basically got what they were asking for. Our one that's just under 1 million hasn't sold yet, but it's getting a good amount of activity. So really the higher end is almost easier than the lower end, which is weird. It's never happened before. And I think a lot of that just has to do with some of the factors that are affecting buyers affect those folks less than maybe the lower end market. So we'll kind of get into some of this stuff. So this is the big chart that really explains what this shift has been, especially in the last couple of months. So essentially, you have estimated number of buyers and sellers. Now, this is national. You guys are going to see some of these slides are national. Everything I showed you before this is our market. It's very relevant to Vegas and what we deal with on a day-to-day basis. These are national things, and I'm going to explain how we differ, but this is definitely a trend that we are a part of. It's just not as pronounced here. But as you can see, the amount of listings has gone up significantly. So these are sellers that have gone up in the last year and a half. And probably a lot of this has to do with people that were staying in homes longer because they had refied into these really low interest rates. Eventually, they have to move. They have life circumstances. Maybe they get relocated. Maybe their house doesn't make sense for them anymore. Who knows? But at a certain point, regardless of how low their interest rate is, they have to move. And I think that's really what you're seeing here because I think some people look at this and just think like, oh my God, look at all these sellers. But really, even if you just go back to pre-pandemic, I mean, we had way more listings back here from 2013 to 2020. And this was a very healthy market in this time range. Really, what's happened is, as you can see, basically, and this coincides with the interest rates. Essentially, when the interest rates went up at the end or the middle and to the end of 2022, you saw this big drop in buyer activity. Now, it was also matched with a big drop in seller activity. Those same sellers that no longer wanted to sell because they wanted to keep their low interest rate. And those really kind of meshed for the last 2 years, which is why we still kept seeing prices go up. And now essentially sellers are kind of getting closer to normal. But again, this is not some crazy shift where now there's just all these houses coming onto the market. It's just that our buyer demand hasn't caught back up to that. And a lot of that has to do with affordability, interest rates, those types of things. So that's where this shift has kind of started to happen. Another one here. So basically, here's the difference between the median sales price and the median asking price. And as you can see, this is the first time in a while that blue line is well above that green line. So essentially, buyers are not willing to pay what sellers are asking. And a lot of that, again, probably has to do with affordability issues, but this is definitely a trend we're starting to see. And again, this is not as pronounced here as it is nationally. Nationally, it's a little bit worse, but it's definitely a trend that we're starting to see. So this was a survey of potential home sellers. I think Realtor.com did this one, but really interesting. 8 in 10 potential home sellers think they will get their asking price. So 35% said they'll get more than their asking price. 46% said they'll get at least their asking price. Not a lot of them thought they would get less. And this is really a messaging issue that realtors need to be getting out to people and everything is situational. And this is why it's so important that you have a realtor that knows what they're talking about. Because again, I'm seeing some listings that still sell in less than a week. I'm seeing some that sit for a long time. So it's really an understanding of all those dynamics that go into pricing, and it's very, very complicated. Obviously, much more complicated than just a Zillow algorithm. That's why Zillow is pretty much always wrong. But important to know where people are at. So 4 in 10 sellers sold for less than their asking price. Now, this data is a little bit behind. This is NAR data, and this is going back through essentially the end of April. They update this data as they go. I suspect when you see an update on here in another couple of months of really what we're looking at today, it's probably about 6 or 7 in 10. So most people are getting less than what they were actually asking for. And again, that depends on your pricing and how intelligent that looked. But what you're starting to see is a general trend where buyers are obviously becoming a little bit more in charge. Price reductions. This is a percentage of listings that had price reductions. As you can see, Nevada were very high. 1 in 4 basically listings are getting price reduced. That makes sense because we don't have a lot of real good realtors here. Most people are part-time realtors, or even if they do it full-time, they still don't, generally speaking, know what they're talking about. But really, only Arizona and Oregon are higher. So really a lot of price reductions. So that's definitely buyer favoriting. People are having to reduce. Now, this was an update that just came out. So this is from FHFA, which is really the best aggregate source of what's really going on. So this is a true, even when you see the median sales price, the average price from LVR, you're taking a very small sample size, and there's a lot of things that can factor into that. Maybe the types of homes that are selling. Some new homes are listed on MLS, which obviously that can affect it each month. What these guys are doing is they know exactly the last time that a house sold, what it sold for, and then this time what it sold for. And basically they time trend that along with every other house that comes in. And so you get a 100% accurate. This is the only 100% accurate measurement of what home prices are actually doing. So this is for the state. So as you can see, this is just first quarter because the only thing that's bad about this, there's so much data that they have to put into it. It makes it incredibly accurate, but unfortunately, it takes a while to aggregate that and actually do all the math on it. So they are a little bit behind. These typically come out about a month and a half, 2 months after the quarter ends. So this is the first quarter data. So as you can see, we were basically flat in the first quarter. Prices went up 0.08 in Nevada. Essentially flat, which makes sense. We feel like we had a somewhat balanced market, going up a little bit. But what's funny to think about is, people have said, interest rates are so high, and they're definitely high compared to what we got used to in COVID times. But really, the last 2 years, you can see we had 6.8% appreciation in 2024, so the market went up almost 7%. 2023, it went up 3.4%. Now, both of those years, we had quote unquote high interest rates for the entire year, basically somewhere around the seven-ish range. 2022, which was basically a half and half year, half the year we had low interest rates, half the year we had really accelerating, higher interest rates, went up 3.2. So really the last 3 years, even with interest rates being where they were, prices have still gone up about 14%. So if the conditions that we're in now continue to last, you're definitely going to see these prices start to go down. I suspect when the second quarter data comes out, you're going to see definitely a drop. I don't know how severe. I'm going to guess somewhere around 0.5%, maybe 1%, somewhere in that range, just because of some of these buyer dynamics that we're seeing. But as you can see, generally speaking, real estate continues to do well outside of 2008. So, as I mentioned, our market is doing better than most. It could definitely be worse. This is the top 100 metro areas. This is the bottom 10, basically, out of those 100. Obviously, all those had pretty significant price drops. That column on the left, this one is for the quarter. So this is first quarter, but really even year over year. So year over year, Vegas is still doing pretty good. I suspect by the end of the second quarter, maybe the third quarter, we may be back to flat for the year. Right now, we're still up about 3% year over year. So, a small dip probably coming in quarter two, but really year over year still doing pretty good. As you can see, a lot of these places already just after the first quarter are down pretty significantly, not just for the quarter, but year over year. I mean, there's places in Florida that are down 4%, 4.8%, Texas almost 2%. So, like I said, when you're seeing some of these stories that talk about national stats, that trend definitely exists here, but it's not as pronounced as what you're maybe seeing. And a lot of those national numbers, there's different markets that operate very differently, and definitely it's definitely not as good here as it is, or excuse me, it's definitely better here than it is a lot of other places. So, what is driving these price drops? It's really, like I said, the lower end market is where you're seeing that is the most pronounced, and particularly in condo townhome. Now, condos are always tougher because they're harder to finance. Generally speaking, both FHA and VA are very, very hard to do on condos unless they're pre-approved, which there's like 19 communities in town that are. So it's very rare. So whenever there's a little bit of a dip in buyer activity, especially if it's, entry level buyers, this is always going to be the hardest hit, and you can kind of see this. So that light gray line is the unit sales. As you can see, it's well below, and we're not comparing this to banner years. We're comparing this to 2022, 2023, 2024. So really, when you're looking at that, down a lot. You can see this line is basically less than half of what these sales have been for the last couple of years, and these weren't exactly, super hot markets for the last couple of years. So what you're really seeing is whenever you do see those price drop numbers, it's good to understand where the drops are coming from because it's not really across the board that you're seeing these crazy deals. It's really more so in certain situations, in certain submarkets, and it's important to understand why that is. So this is on the sales prices and same thing. Obviously, as you can see, along with the amount of transactions, the sales prices have really dropped well below what they were the last couple of years as far as condo townhomes. So very important to know for sellers. If you need to sell a property in this price range, really want to price it well. Probably pricing below comps because otherwise you're chasing the market down because as other people drop their price and they sell, they now set the new comps. So a lot of times you show sellers, hey, the last three of these have sold for 275, and they say, well, I want to be at 280. And really, they probably want to be at 270 because the problem is, when you don't have a whole lot of buyers out there for a certain submarket, The buyers got a lot of advantages because there's way more properties than there are buyers. They get more to pick from. And all it takes is one person in that neighborhood to kind of realize that and get motivated and say, okay, I'm going to drop to 265. And now that property sells. And once it closes, now that's the most recent comp. So now you're not even competing with the 275 comp. I didn't want to be at 270. I wanted to be at, 280. Well, now you're competing with a 265 comp, and that's going to be on your appraisal. So even if you can get the 280 or the 275 now, it may not appraise because your most recent comp's below that. So really, really important if you do need to sell a condo or townhome or something in this price range, really want to make sure that you're working with somebody who can explain pricing well to you, because otherwise what you end up doing is chasing the market down and you get even less because you just keep being behind that. So what comes next? What's gonna happen? It's kind of what people want to know. So these are our interest rates for basically the year is what we're looking at. So we got up over a little bit over 7% as far as our standard 30 year. This has a 15-year. Hardly anybody does 15-year loans. So as far as the 30, kind of went up over 7 at the very beginning of the year, kind of dipped down a little bit, close to 6.5. We kind of had a lot of the economic stuff. The stock market's going to crash. We kind of had all that weird stuff that happened in April and early May. Interest rates went back up. We've kind of seen a little bit of a dip back down. This is about a week old now. This has actually gotten down a little bit more. We're kind of getting more into the 6.6, 6.7-ish range as far as our primary market. But really, this is what needs to happen. I think once rates gets under 6.5, you're going to see a little bit more buyer activity come in. And I think it really needs to get closer to 6 before you're going to see a true revival of buyers. Now, we'll kind of get into what we should be doing after that. So, inflation actually doing pretty well. Best it's been since 2021. Now it's still not gotten under the 2. And this is what the Fed keeps saying is they really, really want to get to that target rate of 2. I think the challenge with that is that inflation had been so high for the last 2, 3 years. I don't know how realistic that exact 2 is, because essentially they need to be looking at some different things by their own standards. They need to be looking at inflation. They need to be looking at jobs. They need to be looking at the economy as a whole. Now, I know they keep saying that unemployment is pretty low, but I think anecdotally, and I think you could find this as well as the numbers, as part of that is that a lot of people have just stopped looking for jobs. I know definitely in the tech world, I have some friends that work in the tech world, and they are struggling because a lot of companies are laying people off and trying to replace them with AI or consolidate jobs and make that into AI, or some people are just not able to find jobs. But the problem is with a lot of those unemployment numbers is a lot of times those happen after a while. These people, they might be getting laid off in 6 months, and so they're looking for a job now because they know they're going to be laid off. Well, those unemployment numbers aren't going to hit until they actually go file for unemployment. But the surveys that I think you've been seeing, the stories that I think you've been seeing with some of these companies that are doing these layoffs because they're going to more of this AI format, those numbers are out there. And you know what those numbers are going to look like. For some reason, they're not factoring that in. And I think that is a pretty big mistake. And I think you could objectively say the Fed's made a lot of mistakes on this. The interest rate increases that we had in 2022 were necessary, but they were the fastest. A, they were late because they let inflation get really crazy before they did that. And B, they were the fastest interest rate increases we've ever had. So they had no problem with shocking the system up. We were having 0.75% hikes at one point. They had no problem with doing that, but they're being really, 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 really cautious with bringing them back down even a quarter point. So I think that this is a huge part of the problem as to what's going on, is that despite a lot of numbers that say we should be dropping interest rates, they're still not doing that. And this is a lot of why the condo townhome market is kind of struggling, is because a lot of the bigger investors have stopped buying. And I think some of the mom and pop investors have decided to sell because the rent inflation has come down. Now, this is probably a good thing long term, because we don't need rents to be going up at 8% every single year. That's not really affordable for most people. But this is causing a lot of investor activity to kind of pull back in that market as well. So, what do we do about this? We'll have some good advice for you. Advice for buyers: more choices, better deals. Now, I think the general consensus that you hear from some people is I'm going to wait until interest rates are low or until they're good. And I don't know, A, what that means, because historically speaking, the interest rate for the last 30 years in this country has been about 7.5%. So we're already well below that. Now, this is not to downplay affordability issues. There are definitely some people, especially first home buyers, where that payment just may be more than they can afford. And if that's the case, then, do what you got to do. You may have to keep renting. But here's the problem, because again, this is not going to be a long-term problem once interest rates get a little bit better because we're not seeing this flood of listings. If there was this flood of listings, I'd say wait for a year because you'd see prices continue to drop regardless of what happened with interest rates. But we're not seeing a flood of listings. Really, again, we haven't even gotten back to like normal levels of sellers from pre-pandemic. So we have a ton of people that are still sitting, still waiting as far as sellers go. So there's not this flood of listings that's going to cause anything resembling a crash. But here's the problem. Most of this is from buyer pullback, so which means that there's a lot of pent-up demand for buyers that would like to buy, they're just choosing to wait. Well, when you follow the crowd, sometimes you get trampled. And that's the problem for people that are waiting for interest rates to drop is let's say you even set a marker and said, I'm going to wait until it gets down to 6%. Well, how many other people are waiting for that same thing? So when that happens, because you're going to see that gap between the seller activity and the buyer activity close, now you're going to get back into a 3-month supply market, 2-month supply market, something like that. And that's where you see multiple offers. That's where you see sellers are not going to give concessions, all these different things versus, the last three buyers we've had have gotten just absolutely stupid deals. One buyer got $17,000 in closing costs. Our last buyer, she got all of her closing costs covered by the seller. We got her over $5,000 on top of that to essentially remodel or fix the property, which there really wasn't a whole lot that was wrong with it. She's actually probably getting money back after all of that because we got her more credit than she's even going to use to actually remodel the property. And you can use that money to, buy down your interest rate. There's builders are making stupid deals, which I'll talk about that in a second. But those types of things are going to go away. So, yes, is your payment going to be $100 or $150 cheaper? Sure, it will because your interest rate's lower, but you're going to have to come up with more out of pocket, which is usually first time buyers' biggest decision. That's usually their biggest problem is not that they can't afford it. It's just that they have to come up with their closing costs. They have to come up with their down payment. Right now, you probably don't have to do that. Right now, you could probably get, if not all, most of your closing costs covered. So all you're going to have to do is come up with a down payment, which is pretty doable for most people. They don't realize how affordable that down payment typically is with different lending options. But as the market gets better and as you see more buyers come into the market because they've all agreed that interest rates are where they want them now, all of those other things that are really more beneficial for first time buyers are going to go away. So, a lot of times people think like, oh, buyers are pulling back. I need to pull back too. But really, again, when you're following what everybody's doing, you're kind of missing out on opportunities. And right now, there's some incredible opportunities for buyers. So, like I said, closing costs, ability to buy down or renovate homes. Yeah, crazy budgets that we've been able to get for people on some of this stuff. Incredible deals on new homes. On my Instagram, I just put out a video of a new home community in Henderson for less than 400,000, where they are basically covering all of your closing costs, buying down your interest rate to less than 5.5%, which is great right now. So you're talking about a point and a quarter below the market interest rate. Some really affordable payments for people depending on what it is that they're looking at. And this is in Henderson. New homes fiscal year ends in September. So you are going to see over the next 2.5, 3 months, new homes are going to be absolutely giving stuff away. And the reason being is because most of them are publicly traded. So do they need to make money? In theory, yes. But the biggest thing they need to do is take those fiscal year reports and show them to their investors, to the stock market, that, hey, we're still selling homes, we're still moving units. And here's the thing. They had built up some of these prices and fees so much when interest rates were super low. I mean, there was there was what I would consider a fairly low end builder that was charging people $30,000 lot premiums for 5,000 square foot lots. And if you guys don't know what that looks like, it's a very small lot. 5,000 is not a big lot. It's half of a quarter acre, so it's not a big lot. And they were charging $30,000 lot premium. So on top of the charge, on top of the price of the house, of the upgrades, whatever else they were doing, $30,000 just to have dirt. And they didn't take those away completely initially, but as their prices are coming down and you're seeing these price cuts, really what a lot of it is they had built in some incredible margins into those things that are now just going away. So what the best part is though is they're putting money into A lot of their in-house lenders are giving crazy deals. I mean, I've seen interest rates in the threes, especially on VA on some of these new home communities. And just really opportunities to get into things that like you can be in there having a payment that you afford. For the ones that, get the interest rate stuff, you're not even going to worry about refining later. And I've even seen some arms come back, which, in general, I don't think are a great idea. But there's a builder that's doing a 7-year arm right now where you can get in for like 3.75. Well, at some point in the next 7 years, if you know you're going to be in that house, you're going to have an opportunity to refi to where it never truly goes adjustable. So those are some really good options that, again, those are going to go away once things get a little bit better in terms of the buyer activity. So for sellers, it doesn't mean you can't sell right now. Like I said, we just had a listing that sold in less than 7 days, got, essentially exactly what she wanted, a little bit over list price with some concessions. So, but really, correct pricing is the key. I'm seeing a lot of agents get out of the business because essentially they didn't really know what they were doing. They could do real estate during, the crazy boom years of 2020 and 2021 because, everybody qualified and like all you had to do was just kind of take orders. Now you're getting back into something where when you come in and you're helping somebody sell a house, you need pricing software, which we use. You need to truly understand the submarkets. You need to have a lot more knowledge than just, oh, well, let's just try this price. That's how you end up losing thousands of dollars. You don't want to chase the market. You really want to know where it needs to be priced so that you can have a good plan. And again, condo townhomes especially, they need, some kind of incentives or something to be attractive. Just there's just a lot more inventory there. And again, doesn't mean you can't sell if it makes sense for you, but you just got to be really smart about what you're doing when you're putting together these plans. Now, here's the good news. Most sellers are also buyers. So it's not the end of the world because really the thing that most people care about, I almost think this is a better time for people to trade houses. And I know, some people may be going from a much lower interest rate into a higher one, so you got to still make sure it's affordable. But here's the good thing. When somebody's selling a property, they don't care about that property anymore. They care about getting the equity out of that property so they can go buy their next one, but they don't care about that property. What they really care about is the one that they want to go buy. Because essentially what they're saying is, I have a big enough motivation that I need to move. Most people don't want to move. It's not fun. So in an environment like this, I think in a lot of ways it's better for sellers because it can be challenging to sell and buy at the same time. You may have to make contingent offers. You may have to figure out a second place to live. Well, right now, on the buyer side, you kind of have a lot of flexibility. So, might you have to take a little bit less than you were hoping for on your house? Possibly, depending on the situation. But you should be able to at least make that up, if not better, if you're working with a skilled agent on the other side, because there are a lot of the sellers that are working with not very good agents and they're not sure why their home isn't selling. So sometimes when they're getting these offers that they shouldn't be taking, they're just taking them because they're just excited they're getting something. So I do think there's an opportunity for sellers to kind of make that up on the other end. And in a weird way, as long as you can make the deal work, you're not going to remember exactly what you sold that house for. You're going to remember that I got into this house that I wanted. So if the whole plan works and it's attractive, it's kind of almost better. So if you'd like to know more, feel free to reach out. This is going to be on our YouTube, but we'll put some stuff out as well. Really just want to make sure that people are getting good information. Like I said, I know so many places that are losing agents and agents getting out of the business because, you do have to know what you're doing now to really truly help people. And so that's what we try to do is just make sure we're giving people the right information so that they can be making good decisions for themselves and their family. And when we sit down and talk to people, I just talked to a friend about possibly moving, and essentially they just decided, hey, I think just based on what you're telling me, it doesn't make sense. Cool. That's what we're here for, is just to make sure that you have the right information, that you can make a decision that makes sense for you and your family. Let me know if you guys need anything else.